We have with us on the phone line Mr. Ankit Miglani, Deputy MD of Uttam Galva Steels, who's joining us on the phone line. Mr. Miglani, thank you so much for speaking with us at NDTV Profit. Now, post the safeguard duty that was imposed on HR coils of 20% or so, we really haven't seen imports of steel stemming. In the month of October, imports were up 27% from the same period a year ago. Do you think, it's not having the intended effect? Why do steel imports still remain high?
Hi, thanks for having me. You have to put into perspective that the cycle for imports is about 4 months. Clearly, the safeguard duty came at a very short notice and wasn't expected in the market. So obviously, imports had already been booked. Those volumes will be entering the country in October, November, December quarter. So the real impact of the safeguard duty you will get in the first quarter of the next calendar year.
And what will be the impact?
Well, there will be a considerable drop in the import bookings of hot rolled coil, but we believe that this will be replaced by imports of finished products such as pipes, PRCA, color-coated steel, and other downstream steel products, because hot rolled coil imports are no longer viable because of the duty. However, there have been no duties imposed on the finished products, which are creating an aberration in the market.
Where does this leave you? Because you use HR coils to make these value-added products, and you continue to see competition there, while your raw material costs seem to be going up.
It leaves us in a very difficult situation, of course. Our raw material is heavily taxed, and our finished products are completely unprotected. So we have to have a significant restructuring of our entire business plan to adapt to this. That being said, we don't expect the safeguard duties to last for long. I believe it's a 200-day period, would end sometime early next quarter. And we are hopeful that the government is considering putting import duties on all products across the value chain.
Right. You said that you will have to then restructure your entire business plan. Have you done that? What are the changes that you're bringing in to deal with the situation? You want higher import duties on all kind of steel products. Will that offer much protection when even demand is not picking up?
Well, as far as the restructuring of business plan is concerned, one is that we will be more import dependent on hot rolled coil, because we have to export about half our production at UGSL. And that cannot be done with domestic hot rolled coil having priced in the safeguard duties. So we will have to bring in imported hot coil to use for export volume, which will increase our imported component, which is actually counterproductive as far as the safeguard duty is concerned. The second is we are also considering importing finished products and marketing directly to allow us to maintain the current volume margins.
But then where does that leave your ready capacities?
In a very precarious situation, certainly. But as I said, the safeguard duty is an aberration and has significantly distorted the market. So we cannot operate under these conditions under normal operating parameters. We have to modify a business plan to compensate for this.
No, but what is the utilization rate at this point in time at your factories?
In Uttam Galva Steel Limited, I believe this is October, November, December is safely the worst quarter we've seen in a very long time, and I think it's the worst quarter we will see for a very long time. We expect operations in January to pick up significantly, and we expect operating capacity to go to 100% in January. Currently, we are closer to running at around 80% capacity utilization. However, dispatches are at par with last year's figures.
Right. What is the outlook for exports? Because I think a large part of your produce, I think 50% of it is meant for exports. Given the global demand scenario, given the fact that China has been dumping, Korea have been dumping all over for quite some time, some of the surpluses would have cleared. What is the scenario on exports?
Well, the export market is very tough right now. The European prices are too low because of Chinese dumping. Middle East and Africa is a concern because of the drop in commodity prices and the drop in oil prices. So there are liquidity issues there. There is a constraint in global demand situation, and In addition to that, there is a lot of dumping by China. We are compensating by diversifying our product mix further and diversifying our geographical reach. We have significantly expanded our marketing force in Middle East, Africa, and the North American markets. And we expect all our efforts in this to compensate for the lackluster demand going forward.
Right. I wanted to understand what's happening on your debt because last year the rating was downgraded. You, I think, have applied for 525 restructuring. Your finance costs have completely eaten into your PBIT. Any approval or any forward movement on that 525 proposal?
Well, the 525 proposal is being appraised currently by SBI Caps. We believe that it should go in for a final approval sometime in December, and I think within this fiscal year we should have everything in place. So our balance sheet for the next fiscal should look much better than the current fiscal.
All right, Mr. Miglani, thank you so much for speaking with us at NDTV Profit and giving us more details on what's happening in the steel sector as well as the company. Uttam Galva hopeful that the 525 proposal that they have given to bankers will get the final clearance in December, and next financial year will be much better for them.